Honestly, truly, this was more so considered a counter trend trade according to the daily time frame. Now, any other time frame that you may be looking at, it could be considered you're actually following the trend. But according to the daily, which I'm gonna focus strictly on the daily to give you guys um a better explanation of what I was seeing, why I called the trade and all of that stuff. So you can kind of see where I was coming from, but at the same time, kind of see why it's best to just wait for the market to come to us in a way, you know. So again, I'm gonna go into detail about explaining this. And if you guys have any questions as I go over, please feel free to stop me, okay? So first things first, if I'm looking at the daily time frame, all right, what is this popping up on my screen? All right, based off the daily time frame, sorry, I'm trying to get some of this stuff off. So I don't need it. Let's move this over. Okay. So based off the daily time frame, guys, what I typically like to do is I like to go exactly to where current market is. Like that's the first thing I like to do. I'm looking at the daily. I'm looking for current market. I'm going strictly off of the most recent candle. Okay. So as I zoom in, the most recent candle is clearly right here. Okay. Most recent candle is clearly right here. Now, from there, what I would typically like to do then is I like to see my pivot points. So when I say pivot points, that's just literally like my highs and my lows. It's basically like areas of the market where the market goes up dramatically, goes down dramatically. And the way I kind of like find that is I just look to the left. So if I'm starting currently from here, where this current candle is, which is current market, I typically go from the left. So how did I get here? I got here from up here. How did I get here? I got here from down here. How did I get here? I got here from up here. How did I get here? I got here from down here. Are you guys kind of following me? Can you guys kind of see that? Like where I'm kind of like basing this off of from here to here, 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 and then saying basically here and then here. So basically my major areas where you kind of see market going up and then it automatically just drastically goes down, or if market is going down, then for some reason it just shifted and went to the upside. These are the areas that I'm looking for. Like this is basically market structure. These are the highs and lows that you're looking at. All right. So starting it from here, guys, I included this low, this lower high, this equal low, and then of course this little structure that we have here, this low, high, higher low, higher high, higher low, higher high, right? From this lower high to this equal low, this can be considered a retracement of this move from here to here. All right. Now, with that being said, if I'm considering this lower high and this to be an equal low, and I'm potentially thinking that this right here can actually be the next lower high. But then again, if we look at this, we're getting like pushes up. We're looking like the market is actually trying to create an uptrend, right? If that is the case, right? And let me draw a just to be mindful, because if I'm going from to create an actual trend or a trend line, it's going to look like this.
Are you recording?
Right? Yes, I should be recording. Is it not recording?
No, no, I'm just making sure.
Yes, it's recording. It's recording, bro.
It's recording, yeah.
Okay, awesome. So from this aspect or this point of view, right, I can see market either going down possibly or going up. So, but from previously what we see, we can clearly see that we're getting higher highs and higher lows here, right? Everybody agree with that, correct? We all in agreement to that. We see that we have higher highs and higher lows here, according to
Yes.
okay,
Yes.
awesome. So that's what I want you guys to kind of understand, right? Looking at this trend, ultimately, if you're looking all the way from here, looking to the left, are we in the uptrend or are we in a downtrend? Someone tell me what type of trend you think we're in. Just looking at this right here.
Downtrend.
Okay, downtrend. Some may say uptrend. Anybody say uptrend? What y'all thinking? Because they can be looked at in multiple ways. It can be looked
I
at in
would
multiple
say
ways.
I
I
would
would say
say
in
up. Say
2025
up.
it was
Say that one more time. I'm sorry.
I would say up. Wow.
You said you would say uptrend.
if you zoom out, because you see the last one on the left where you got the circle,
Mm-hmm.
it was respected.
Absolutely. Okay. So
So that's market structure, right? That is like high level market structure, though.
yeah, let's drag this out. I'm just drag this zone out a little bit so we can see. And then I'm also gonna mine this zone too.
I would if I was looking at it, I wouldn't be able to like tell if it was up or downtrend because it doesn't look like it's like consolidating.
That can be an instance as well too. I mean, because looking at it on the high time frame, this definitely can look like consolidation. It's playing inside of this zone, it's playing inside of this area. So we really can't tell if we're actually in a full uptrend until market breaks a previous lower high. Looking at this, it don't look like this was the last lower high that market created, and then for some reason market created this here. So technically, we're actually thinking that we're looking for market to continue to push up. It has to break these previous lower highs. Like as you can see, lower high, lower high, lower high, lower high, lower high, lower high. You know what I'm saying? So from here to here, we get like some type of retracement to where market could continue to push down. But if market tends to respect this last higher low, right? If it respects this area right here, it can continue to push up. But like I said, looking at this from this point of view, this is very confusing, and I don't want to confuse myself. So I try my best to get as close as possible to market, so I can actually understand what's going on. Right? I can look here all day and say, oh, this is uptrend or oh, this is downtrend from this point of view. Now, just because I'm not completely sure, I have to go with what makes the most sense, what confluences give me the most understanding of what the market can potentially be doing. So based off of, my thought process of what I was looking at was I was looking at this as a lower high, this as equal lows, and I was looking at this as potentially a retracement from this lower high here to this equal low here. And that's a clear, you know what I'm saying? Let me go back and put that back. That's a clear 61.8 retracement if you ask me. That's a clear 61.8 retracement at from this lower high to this equal low to this lower high. That was my thought process on this. All right. Now looking at that, I'm thinking, okay, well, maybe we may be in a downward trend, but there's a potential chance that we're not because we still have low, higher low, higher low, and now we're waiting for market to create this next higher low. Now, where is this higher low going to be created? I don't know that, so I need to actually figure that out. But if I'm looking from this point of view, I'm thinking, this could potentially be a sell. All right. Now, in this case, when I went ahead and did, I'm gonna just take some of this stuff off my chart because it looks really crazy. All right, it looks really crazy. So let me take some of this stuff off. But I know that those zones that I just had are important zones that the market is, you know, kind of trading inside of and in between. Oh, I don't think I grabbed it. Okay. I'm gonna take this off too. I already know what current price is. So again, guys, what I typically do, I go from current price. I literally look at from the current market to the previous structure and then the previous structure, and I kind of just figure out exactly which direction should I be going into. That's literally how I look at the market, and that's kind of how I tend to understand it. And like, everybody understands the market a little bit differently. All right. So based off of that, that's what I was thinking the 61.8 was. All right. Now could be wrong, could be right. Doesn't really matter. Now we're out of this trade. All right. So from here, from this low to this high, we got a higher low here. All right. So this is what I love to do, guys. Kind of like to see what happened previously. So if I go from this low to this high, right, we can see we got a nice 61.8 retracement. I want to show y'all something to see. This is what I need everybody to really understand. Market just doesn't come to a certain area and just have a reaction and goes up. It doesn't just do that for no good reason. It has to have some type of structure, some type of confirmation to do this, right? If I was to take this off, right, and we're looking for market to retrace back to this 61.8 area that we're, you know what I'm saying, that we're thinking, because we know that market created a higher low here. So it's easy for us to say that now. So if we were looking for market to come back to this area or whatever, right? It's something to the left that kind of like lets me know that, okay, this is a good area that market is going to respect. Can anybody tell me from where we are right here, if I look to the left, what do you guys kind of see that could potentially say once market gets to somewhere in between this area, we should continue going upward. Just based off of what we see right here. Is there anything that you guys will look to the left and say, hey, I should be looking to target my 61.8 area or anywhere within this area right here?
Would that be
Anyway, there's
resistance?
Say that one more time.
I said that would be resistance level.
Right here.
Yeah.
Somewhat, yeah. It would be a resistance level, but now that we're above it, it's no longer resistance. It's considered what?
Equal lows.
Not necessarily equal lows, but I mean, somewhat equal, somewhat. But let's drag it out a little bit so you guys can kind of see something a little bit better. All right, as y'all can see, market created support here, and then we broke above support. All right, we broke above it. Well, sorry, we created support here. We went below it. We broke through support, then we broke back above, which now, once we broke below this support level, is now our resistance. So we ended up breaking above the resistance, and now we're kind of retesting this area as a what?
Support.
A support. All right. So based off of that, once market hits a support or a floor, what should we expect market to do? Who knows this answer? Once market hits a support, what should we expect market to do?
To go up.
Go
To
up.
go up. Perfect. Now, again, the way that our system is in place, the way that our strategy is, guys, all we do is wait for market to come to our area of interest, which is our 61.8. We look to target our 0 or our negative 27, whichever you choose. Let's say you wanted to target a 0%. Now we're going to place our stop loss to where we have at least a 1 to 3 risk to reward. And there we go. A 1 to 3 risk to reward. Let's make sure we're right where I need to be. All right. Boom. All right. There. Kind of get it right there, the 1 to 3. But you guys kind of get what I'm saying. 1 to 3, right below the 78.6, basically. Now, this is literally our system, guys. And you could target the negative 27 for a new high as well, which I would probably be targeting the negative 27 for a new high because I knew once a new high is created, a new higher low that has to be created, right? So from here, guys, this is the perfect setup. This is the textbook setup, right? This is exactly how our chart should look if we're looking to continue. I mean, we know it's created a higher low here, but anyways, just to break above this little structure right here on the lower time frames, I'm pretty sure these are lower highs, basically. So market ended up breaking above it, retracing. We're looking for a retracement back to this area. Now, someone tell me this: market comes to this 61.8. Once it comes to the 61.8, what do we look to do?
Wait for confirmation.
Wait for confirmation. A lot of people think we're supposed to just automatically buy here. Guys, you don't just automatically buy the line and expect market to just shoot up. Like, you have to look to the left to understand, why would market go up from here? What tells me that market is going to respect this level and shoot up? We already have a lot of confirmations by having this support here. We have that market respected this level of support, ended up breaking below it, didn't want to stay below it, came back above, broke through the resistance level, and now we're coming back to respect this level again, potentially. Like, we can see market is literally having trouble staying below this area. In the previous time it did, and this previous time it did. So from here, right, we should expect market to continue to push up after hitting this area. But it's also something that I see to the left of me that can give me extra confluence or extra confirmation that market is going to respect this. Who knows what this area is right here? What the
That's the
market,
fair value gap.
that's a fair value gap. When you align fair value gaps with your 61.8 or whatever your entry is, like if your 61.8 shows you a gap, bro, like that is literally another piece of confluence that you can use to make you feel a lot more comfortable about knowing that this is the area of entry. Do you guys know what order blocks are?
No.
Okay. Order blocks are nothing but when market, if I'm confusing you, please just give it time, because I want you to actually understand the market, not just assume based off of just thinking that you're knowing to enter a trade just based off of this, or we just enter just because. No, we enter for a reason, right? we're entering at this 61.8 area because for one, there's a fair value gap and there's also a order block. And basically, order blocks are nothing but the pivot points, your structure, your highs and lows. That's basically what it is. Right here, order block. Right here, order block. Right here, order block. It's literally your highs and your lows. Now, we don't speak on that, but it's very important for you to understand and know that because once you are able to locate order blocks, fair value gaps, that will literally help you understand when it's time to actually enter your trade. That gives you the best precise entries and it makes it a lot easier for you to feel comfortable knowing, okay, wait, I'm at the 50%. I haven't even tested my gap yet. Let me not enter this trade just yet. Because it's something that starts with an L that can happen. I don't know if you guys know what that word is, but it's an L and market always looking to test it before it actually goes in your direction. Who knows what that word is?
Liquidity.
Liquidity. Liquidity, guys. Market look to target liquidity. It already targeted liquidity here. It came and targeted this liquidity, took out people that were looking to, take the buys and making people think, oh, it's time to sell now. And as soon as it took the people that were buying out, now it's looking to target this liquidity, right? So I want y'all to understand that the way the market moves is based off, it's just going for liquidity. That's the only reason the market is moving. It's looking to take out the retail traders, right? And this is the way that we can kind of avoid being retail traders. This is literally our system. So I'm gonna go ahead and let this thing kind of play out so you guys can see why sometimes it's best to, when you mark your low and your high and your fib, and then you are looking to enter at these areas, look to the left to say, okay, where should I be entering this market? We already have it marked up. This is our area of interest. What we should be looking for is to place our stop loss potentially below the 78.6, or to even be safer, you can place it right below here. Now that depends on your risk to reward. If it doesn't make sense, if it's not a 1 to 3, don't take it. You have to make sure that when you place a risk to reward, it's at least a 1 to 3. Maybe I say a 1 to 3 is good, but sometimes you can get like a 1 to 2, 1 to 2.5. It really depends, but I would say a 1 to 3 is probably the best route that you want to take because you would literally have to lose about 3 trades, you know what I'm saying, in a row, or you have to lose 3 trades in a row before you really can be negative. Like you can take a trade, win the trade 1 to 3. To lose a trade, you're still being profit. Lose another trade, you're still being profit. And then you lose that third trade, and you'll be at break even. So it's always best to just go 1 to 3 at the minimum, but you can always have higher risk to reward. So let's just put this back to where we kind of have our 1 to 3. Like I said, I'm targeting at negative 27. So that can literally be a 1 to 3 risk to reward. So let's go ahead and let that play out really quickly. Well, damn, that happened a little too fast. But anyway, we came right to our 61.8. Market came in and literally came to our fair value gap. And look what happened. We instantly went and hit TP1, TP2. That's perfect. Market created a new high here. So if market created a new high here, we can expect from this low to this high, we're waiting for market to come and give us some type of structure or some type of retracement to this area right here. Now, based off of this, all right, I'm going to show you guys something because this is easy. Looking at this from the daily is very easy until you have to go to the 4-hour and understand something. The 4-hour, right? You're saying that the market is giving you high, low, lower high, lower low, lower high, lower low. Oh, nice little liquidity sweep. People thinking it's time to buy. Nope. Take you out your trade, and then it goes in your direction. All right, let me go over that one more time. This is a retracement from here to here. All of this right here is literally a retracement. All of that shit is a retracement. You got a low here, you got a high here. You're waiting for market to come back to your area of interest so you can take the buy. All right. I'll literally tell you guys, if you're looking to get in this trade here, have we had a liquidity sweep? No, we haven't swept anything below anything below this area. We technically haven't swept it yet. What market do over here? It literally swept below this support level and then took off in your direction, right? So again, if from this low to this high, you know that you're looking to enter off of this zone, you look to the left and say, oh snap, this is a gap in this market. This is also support in this market. This is probably the best area to take this buy off of, and we can literally place our stop loss below here, or you can pretty much have a more aggressive stop loss, which can be literally below your gap. All right. So what I want you guys to kind of understand is that our strategy is like a chef's kiss, bro. It's chef's kiss. But when you actually understand why we're buying at those areas or why we're selling at those areas, that's the icing on the fucking cake. And excuse my French, but seriously, it's the icing on the cake, right? When you actually can understand why you're entering and you can kind of have extra confluences and reasoning for entering the trade. All right, so that's that. Right, basically, wait for market to do the little liquidity sweep or whatever it chooses to do, and then you enter the trade. We already know we're looking to enter off the 61.8, anyways, right? So basically, when market comes to the area, you make sure that you actually got a legit entry or you actually follow it. Even if you entered the 61.8 and just placed your stop loss below here, you still would have been fine. But to actually understand what's going on here, the accumulation of the orders to manipulate and then distribute, that will get you very far with it. All right. So now we already confirmed that low, that high, that higher low. Now we have this low, this higher low, and this higher high. Now we can move this. All right. We're gonna move this fib. Oh, go ahead.
Hazy, can I add something real quick?
Absolutely.
Can you also add the ultimate confirmation based on the 1 hour time frame as well after getting the 61% on a daily?
Absolutely. The last confluence, the very last confluence. Anybody know?
Because we did actually place that trade on a few weeks ago, so and we did make money from it. So I wanted the team to see why I actually called that entry price on the 1 hour.
Anybody know what the last confluence is? So this is the low, this is the high. What's that last confluence? Anybody know? What's this right here?
Break a structure.
Break of structure. So basically the break of structure, once you got a break of these lower highs right here, which is up here, right? I typically say let it retrace back to where it broke out from and then take the trade. Sometimes the market like to break structure and keep going. That's okay. Because if you think about it, do I feel comfortable enough to place my stop loss, my entry here, and my stop loss way down here? Not necessarily, right? If I know I'm looking to enter off the 61.8, I'm expecting the market to come back to me, right? I don't want to rush it. I don't want to just jump into it because at the end of the day, I know that the last low is here. From this low to this high, I know that stop loss should be somewhat near below this area. Not here, not tight right here, right? Not tight right here just yet because I don't know if the higher low is actually formed. But this is the last confluence on the hourly. You're waiting for structure to be broken. Any lower high that you see, wait for market to break it. Market broke it right here with this move right here. Broke this one, broke this one. Anything that retraces back in this area, ooh, come back to the 618 is very lovely. You can enter your trade there. Or, if you're someone who sees that market broke above and I would just say wait for it to come back to your point of interest. But that's exactly what you want. A break of trend line, a retest of your trend line, and then you take the trade up. So taking it here wouldn't have been bad either, because you got the breakout retracement back to where it broke out from. Taking it here, placing your stop loss anywhere pretty much below this area was fine, right? This is the safest area to place it behind. You don't have to really go that low. But placing it below here is even perfect. All right, so that's the last confluence when you're actually looking to enter the trade. Wait for that retracement or those lower highs of the retracement to be broken before actually entering the trade. All right. So I'm gonna go back to the daily, and I'm gonna show you guys. Our next level, which is this new higher low. All right, this new higher low, and then our new higher high. All right, perfect. So from there, right, we see market created this low, created this high, created a higher low right here, right? Create a higher low here. Now, same thing. Market should come to our 61.8 level, and we should be looking to target 0%, which is equal high, or negative 27, which is a new high. All right, let's see how market kind of performed from there. Boom, another new high. All right, so after that new high, we should be expecting the market to create what next? After a new high is created, what's the next thing? We got a low, high, higher low, higher high, higher low, higher high. The next thing we're looking for?
High low.
Higher low. All right, higher low. Now, based off of that, we're looking for market to create a higher low. Most people would say, okay, now Zay, I can move my fib from this low to this high. Most people would say that. All right, that's where everybody's looking, right? That's what makes sense, correct? Y'all follow me?
Yeah.
Okay, perfect. Now, Answer me this. Answer me this. Would you enter this buy now? We're at the we done touched the 61.8. Would you enter the buy now? Based off everything I just went over, would you enter that buy now? We done touched the 61.8. Are we entering that buy? After everything that I kind of just showed you guys and went over with you guys, are we entering this buy right now? Let me check the chat.
No.
As someone said, I think we need more confirmations before we take that buy.
We do need more
No.
confirmation. Somebody said, look to the left.
Yeah,
Absolutely.
and then also the fair value gap here.
Absolutely.
There's a fair value gap here that needs, we need to check that as well.
Absolutely. Absolutely. So again, the sale wasn't a bad call, but again, just because it wasn't a bad call doesn't mean that it was following our system. It doesn't follow our system. So I wouldn't call it an A plus setup. It's more of a B plus setup because it's a counter trend trade according to what we're looking at. All right. Yeah, I can explain fair value gap. It's basically just when the market creates a huge let's say momentum. Market creates crazy momentum to where it just shoots up or just shoots down without any type of like retracements, candlesticks, or anything. It just how can I explain fair value gaps, bro, without like really
It's pretty
confusing?
much a retracement. It's pretty much a retracement of the last bullish or bearish massive momentum candlestick.
Basically, yeah. It pretty much just the market kind of just like when the market just shoots up with no type of retracements, it's just a huge candlestick that just creates a gap in the market. It just creates buying orders that just happen here. Everybody just shot the buy, like people just bought here instantly and shot the market up. So with these gaps happening, we know that if people bought straight up here, then we know that there's some type of stop losses and all that money here for the market makers to come back and retrace back into that because there's no way they're going to just let this market just continue to shoot up bullish without coming back to retrace, right? Coming back to retrace to continue the actual direction of the market. All right. I'll give you a little bit more explanation of fair value gaps after this call. I'll make sure I drop that in the chat for you guys. Kind of had a document for that for you, but I'll make sure I get that to you. But market fair value gaps, the market likes to come back to those basically. Gaps in the market, just let us know that, we're potentially, and it all depends on the actual candlestick too. This right here was a great candlestick to show us that, the buyers are still here. So there's a great chance that market is going to come somewhere in this fair value gap and continue up. But either way, right? Let's go back to what we were just talking about. So this was the actual sale that I was looking to call. Now, this buy here at the 61.8. Yeah, we could say from this low to this high, yeah, that's a higher low, that's a higher high, and we can really get an entry right here. But I want you guys to understand something. If you look to the left and you say, if I enter here, you should already know your stop loss has to be below here, off rip. So entering this trade, that's a 1 to 2, the 1 to 1.2, and then this right here is literally a 1 to 1.8. Would you take that trade based off the risk to reward? I hope everybody says no. I'll just answer it for you. Absolutely not. Absolutely not. If it's not a 1 to 3, don't even bother. All right. Knowing that stop loss has to be here because this was the last low, you should be waiting for market to show you some type of higher low or some type of confirmation that okay, this is at this area is now the higher low. But looking to the left, guys, again, looking to the left, you see here that you have no support level. Right? This is the last support level that you have. Right? If we were to draw this out or me to say, just based off of entering here, it's really not enough for me. It's really not enough. Right? Because you see how we went from here to here and market created this nice little high, created a nice little higher low. We drew this out here. Now, when we draw this out, we can kind of see why market reacted the way it reacted from there. Resistance, resistance, broke through resistance, support. Here we have resistance, came back below, broke through resistance. Now we can label this as support, right? We can label that as support. But we got to understand that our stop loss has to go here. And we also have a gap here. This is an actual order block. This is a fair value gap. This was the low. This was the high. This is the retracement. Is market done retracing? Let's find out. Let's find out. So according to the 4-hour trend, right? What do we have? Is the market done retracing?
Nope.
No,
Nope.
no.
All right. So this is one reason why I called the sales again, just because it might look like a good setup, right? Just because it might look like a good setup. Does it follow our system? It did not. Now I'm not gonna say market not gonna dump down and hit our take profit. If it does, that's great. That just lets me know that I was actually looking at the market the correct way. But let's say if it doesn't, guess what? It just lets me know, okay, Zay, you should always just wait for market to give you what you're looking for. Now, again, don't get me wrong. Looking at the market from multiple ways, I thought this was a 61.8. This was a new lower high, and we could take it down to come and test this area. It's a great chance the market is going to come and test this area from this low to this high. We're still in the downward trend, but I don't know that for sure. I can't promise that. But I'm almost certain that we're going to come and test this fair value gap. And we might even get a double bottom right here. All right, we might even get a double bottom right here for market to continue up. That's what I was looking at, potentially. But do I know that's going to happen? No. But based off of what I was seeing on the 4-hour time frame, I'm saying, okay, this shit is still bearish. Let's go ahead and get a nice little intraday day type of trade from this thing. And then once market comes back to this area, we can start looking to get in to the buys. Now that's just too much. Right? That's just, honestly, that's just too much to be doing. But like I stated, I want you guys to understand something here. You know, you got to understand why people are buying. You got to understand why people are selling at the same time, right? And the reason why this is actually trading down right now is we already swept the liquidity from this high. We went back below it. We retraced it, and we're starting to drop it off now. Another thing that we could potentially go off of, we have this high right here. We have this low here. This could be our lower high from this downward trend. It's so many scenarios that can play out in your head, right? When it comes to trading, but you got to go
Does it get out something as well?
what makes the most sense to yourself. Absolutely, bro.
So what everything Zaydan said is very true, right? Even myself, I was telling Zay I somewhat kind of agree with the sell, but that's when you gotta use more than just technical analysis, right? That's why you gotta look at gold and see the correlation between AUD and gold and so on and so on and so on. Look at that's when you also gotta look at the DXY. You know, if the DXY is bullish, gold should be bearish, and we know AUD tends to be bullish, like 90% correlation with gold. So if gold is bearish, then you should expect AUD. You should be buying against the AUD, which means you should be looking for buys on EA and so on and so on. So you gotta be able to. Sometimes if the TA does not make too much sense, or if you're kind of confused, make sure you use correlation to your advantage as well. That's what I'm trying to say, pretty much.
Absolutely.
And that's what that's exactly what I've been doing with EA. The last couple of high lows, we did actually get in EA twice the last few weeks, and we did make money from it because I was literally watching gold and gold been selling for the last couple months. So if gold's selling 90% of the time, you should be buying against the AUD. So just keep that in mind.
Hi, Mino. Just a quick question. I know we've spoken about the correlation before, but I'm not sure if we have anything on correlation in the PDFs, in the training material.
So there is definitely correlation, but
Okay.
not between AUD and gold. There's a correlation based on the DXY, right? There's literally a video on in the course. I believe the title is like DXY US dollar, where I go over the correlation between the DXY and all the USD assets. But there's no video about gold and gold and AUD. But the DXY for sure, the DXY and all the other assets, you should see that in that video. I literally mentioned if the DXY is bearish, then all the assets that end with XXX should be moving the opposite and vice versa. So
Okay, thank you.
Perfect. And Carter said that's definitely a DXY and another video on just go in the PDFs. Definitely try to take a look at that or locate that if you can. Absolutely. I would definitely say when it comes to correlations though, do not just assume just because GBP USD is going up, that means EUR USD is going to go up. Like, don't just buy all of them just because one is going up, just because you're thinking the DSY is bearish. If the DSY is bearish, of course you'll think that EU should be going up, but don't go and buy EU, GU, gold. Don't try to go and buy all of those at the same time without even looking at it, because then you can really mess yourself up. Because you never know. The European currency could be doing really great, and Great British currency can be doing a little bit terrible, which means that while EU might be going up, GBP might be going down for a little bit, and while you're in both all buys, you may be red on one and blue on the other. You know what I'm saying? Or some type of news or something may have happened, and now you know what I'm saying. You're kind of stuck in some trades that you shouldn't be in because you just jumped in based off of thinking that, oh, since this currency is moving this way, then all of these should be as well too. So try not to do that. You can get cooked on that for sure. But yeah, as far as correlations, man, definitely use that to your advantage as well when you're looking to trade a specific currency. But
Hey, Ray, I have a question, Ray. Just please leave it here. Just leave it here. So my question would be, at what point, like I'm just looking at this chart right now, and with everything you've said, um, at what point do we now take this trade? Just take it for a buy right now, because again, we have the fair value gap, and I believe that this, we've not even on the 1 hour chart, you can see that it hasn't broken the structure when we saw that previously. So this would still have been a good sell, like, because we know the market might still come down to take the liquidity of this fair value gap as well, and then we have that retracement up. So are we looking at maybe at a 78 for a possible buy at that point?
Zay, can you let someone else answer that question for him based on the course, like the ultimate confirmation?
for sure.
Can anyone answer that question for him?
Can you repeat the question again?
Excellent question. Okay, so at what point do we take, just because of this particular chart, I know we take buys between the 50 to 61.8, but because of this particular chart, and we have a fair value gap there where and it has under the 1 hour in the 1 hour chart, it hasn't broken structure even at this 61.8. So I'm thinking that obviously it still needs to come a bit down towards the 78, have that retracement towards that 78 where it will also sweep the liquidity and all, take that fair value gap, and then now you can take your buys from there? Or do we actually let it retrace and then let it go up to the 61.8 path, and then we take our buys at that 61.8?
Yeah, for me, I'm thinking like once it hits like the fair value gap, and it breaks structure, like breaks the retracement trend line and retest it, and then I think like that's the ultimate confirmation to end the trade.
There you go.
Perfect. There it is. So just to explain exactly what he said, guys, is literally let the market retrace as much as it wants to. As soon as the market breaks a lower high on the retracement, and you're at your point of interest, which is potentially, let's say, your fair value gap, that's where you actually enter it. I also when I look at this, I kind of can also understand what the market could potentially do here as well. Because looking at this, right, this is going to come with a little bit more experience. But looking at this makes a lot of sense. We have low here, higher low, higher high, higher low, higher high. Now, I do know how market likes to play games, and I do know that we can see market broke here, came and respected and touched this support again after it already done played in this support. Market broke here, came and hit this support, right? Who says that market isn't going to come retrace down and play at this support again before actually, let's say market want to do this move right here. Let's say market want to sweep this liquidity here, then go back up, retest, and then take off from here. Who says the market doesn't want to do that? That's a great example of a liquidity sweep here, and another example of testing this gap as well. I want y'all to be mindful of that too. So just because we're thinking that, oh, this is the area to buy, that looks very retail. That looks very, everybody can see that. It's so easy that everybody can say, hey, let's buy here. Well, guess what? The market maker is going to say, everybody going to buy it this year right here. Let's dump it lower. Let's dump it past this area because they're going to put stop loss below here. Let's dump it lower and then take off with the buy. So while everybody's looking to buy this area, they dumping it. Man, we're still waiting on the retracement to finish, right? Because look at this right here. As we continue to wait for market to finishes it retracement, because we don't know. We really don't know. I ain't gonna cap. We don't know. Market can literally do this all day long. And then the minute that market decides that it wants to break above here, then we know. Then we say, all right, bet. We got to break up this lower high. You can drag this bad boy out, let it come back and retrace where it broke out from. And guess what? We enter the buy right here, stop loss below here, and we take our trade right on up. Right? It literally can do that move. And it makes sense to do that. Right? You already swept the liquidity here. So why not target this liquidity as well? That's how I look at the market. I don't want to look at it as a retail trader to say, oh shit, I can literally just enter here. No, I cannot, because I still have to understand that market is creating lower highs here, lower highs and lower lows. So until we actually break above, then I'll look to buy. There's nothing that gives me an okay to buy here. Nothing in this tells me I need to buy right now. Nothing. The only thing that would give me an indication to take a buy is a break of a lower high. That's it. That's all. The moment that we break a lower high is when I start looking for time to buy. As you can see, I will literally hawk a trade down with no problem. Lower high, lower high, lower high, lower high, and let that mug keep just dropping until it breaks one of these red lines. Once it breaks that red line, then I know it's ball game. Does that make sense? Once we break above here, I want a retracement where we broke out from, and then it's ball game. But I would like to do that near my 61.8%. If it's not near my 61.8%, then I'm not even gonna bother with it. But I want you guys to understand, like, even when something looks this good, if you see it, Jermaine see it, TD see it, I see it, Mino see it, guess who else see it? The market movers. Everybody's seeing the same thing. So what you have to wait for is the sweep of liquidity. Let you get a retracement trend line going, let you get a liquidity sweep, then let's get a break of that retracement trend line. Let's get a retracement, and then we take the buy. Right? Because right now, this thing is selling. This thing is bearish right now, according to this retracement. Overall, we can say bull. But according to this retracement, bearish. And also according to looking at it from this point of view, this thing could drop. Right? But the only way that we can confirm when it's time to buy is when we break a lower high. Right? That's the only time we can confirm that. As of right now, there's nothing to confirm. It can come to our 61.8 all it wants. If it did not break a lower high, then that just means we have no change of character. It's going to continue probably going in that direction until a change of character or a break of structure has happened. Everybody following me? Does that make sense? So just because I looked to sell, I was looking to sell here, doesn't mean that I'm on point or I'm right. Right? This is just a retracement. Market can start retracing any given moment, break a lower high, and continue bullish, literally. But then we will know once we get a break of a lower high, it's time to look for buys. You follow me? Y'all follow me? Everybody good?
Yeah, we're good. Thank you.
Perfect. I don't know what just happened with this chart, but okay, yeah. So that's it, guys. That's literally it for now. You know what I'm saying? That's literally all it is. It's just waiting for market to continue to retrace, bro. And like I said, again, I'll repeat this again. There's nothing wrong with me thinking that the market was going to drop down here. Because there's a chance that it will, and it's a chance that it will sweep liquidity here. It's a chance that this trade will win, but that does not make it a good trade. I want y'all to understand that. I never thought, this was a bad trade. Let me tell the team to close it. That wasn't my thought process. My thought process was more so Mino says, hey, I think this is more of a counter trend trade, bro. I said, look, bro, you might be right. Let's just go ahead and close this trade. Let's just go ahead and close the trade. I don't know why my computer's doing this right now. maybe I'm giving out too much game, too much sauce. The market don't even want me to look at it right now. But literally, this is the reason why I said, all right, let's just go ahead and close it. You know what I'm saying? If we're not seeing eye to eye on it, just go ahead and close it and not worry about it. We'll take the small loss. I'd rather take a small loss than a crazy loss, knowing that we were going against the system. All right. So again, I kind of gave you guys both thought processes. You know what I'm saying? I gave you both thought process. I'm thinking that potentially we had y'all still can see my screen, right? I don't know what happened to the computer or why did this go away. But again, potentially thinking that this was a lower high, this was an equal low, and this potentially our lower high to continue in selling. But also, we still seeing that we have higher low, higher low, higher low, higher low. If I was to draw like a trend line going, right, we can kind of figure out if we're still trending up or we're trending down. Of course, this was a small retracement and then market shot up. So this could be potentially a small retracement just for market to shoot up as well too, right? So look at it either way. You just got to have that confluence, those confluences to actually take your trade in the direction that you think the market is going to go in at the end of the day and be okay with it. All right. But at the end of the day, looking at this, the safest thing to do is wait for market to give you like a higher low here according to what has been given us and take the buy up. Safest thing for the opposite side, like we did here, is wait for market to come here, create some lower highs, and then take it down. Right. But again, it could retrace, small retracement for a bigger buy, or continue to go below here. We shall see. But I definitely have a high chance of market coming to this gap or potentially sweeping liquidity right here to continue to the upside. Right. It's a great chance that any of those could happen. You know what I'm saying? But hope you guys kind of understood the thought process of EA. I did not want to type all that out in the chat. I really just wanted to hop on a call with y'all and kind of explain that. But that is the reason why we closed that trade. You know, no one likes to take a loss, but I'd rather take a small loss than a crazy loss by not following the system. And we know it works. People getting paid out left and right, man. So let's continue to follow it. I appreciate each and every one of y'all for hopping on the call tonight. Before we get out of here, do y'all have any questions before we end the call tonight? Any questions? Y'all good? Everybody's great? Am I frozen? Like I'm frozen. Yeah,
Now you, yeah, you're
okay,
good.
okay. Okay, cool. I don't know why my computer keep cutting on and off, man. Perfect. All right. Well, in that case, man, appreciate y'all. If y'all got any questions, feel free to message in the chat, message me privately. Shout out to my June giveaway winners, man. Don't forget to book y'all one-on-one session. If y'all haven't sent y'all email already, make sure y'all send that to me so you can get your cash prize. But other than that, I will see you guys on Hans' call tomorrow, right? For our fundamental. Yes. Hans' call is tomorrow for fundamental. So I should see y'all on that call tomorrow night. Y'all have a good night. I appreciate y'all.
Thanks, Z.
Appreciate it. I'll say good night.
Night.